Nilesh Shah joining us this morning. Nilesh, Sensex down another 1,000 points as we speak. Not just Corona, it's now, of course, the crude war that's also taken center stage. Does this throw all strategy out the window, given what we're seeing on the back of what was already a sell-off week?
The crude war, whatever it is raging, will be beneficial to India. There might be some impact on the divestment program of the government because of lower crude prices, but overall lower crude prices benefits India. It does not harm us. However, right now for market, there is reasonably large FPI selling that's putting pressure on the sell side, and that is induced more by globally spreading coronavirus and no immediate medical solution visible. So clearly investors are nervous and they are all controlling or cutting their risk, and we are becoming part of the casualty over there.
All right. But Nilesh, given the fact that we're not seeing any easing off, there's no visibility on Corona, so much uncertainty, volatility so high, it's hard to sort of have the gumption to get into markets at these lower levels. And if you're already invested as well, the picture seems to be looking incredibly grim, at least for the moment, at least in the short term.
Undoubtedly, it's extremely painful to see the impact on the portfolio of investors. And what we are seeing is the correction in large cap stocks. But over last 2 years, we have seen similar correction in small and mid caps also. But then, these are trying times, and clearly an investor who does the bottom fishing in a falling market does end up making lots of money over a period of time. I go back to our experiences during SARS time in Jan to March 2003. Markets had corrected then about 15%. Right now, we are down about 13% from stop. So our downfall is almost similar in direction. And once medical science found out a solution for SARS, over next 12 months, our markets delivered 83% return. Now, obviously, in those days, markets were very, very cheap, and hence 83% return was probably possible. But it does show a pattern across SARS crisis, Ebola crisis, Zika crisis, or influenza virus crisis, that markets fall between 10 to 15% from top. Medical science then found out a solution, and with that solution coming into play, world slowly recovers. Market recovers much faster than economy in anticipation of that recovery. And to some extent, that recovery is aided by extremely low interest rates and pumping up of liquidity by central banks. It also is aided by loose fiscal policy pursued by governments around the world. So this is how the patterns have developed over last 3-4 crises related to virus or related to medical science. And let's hope and pray that the same pattern plays out this time also.
Nilesh, that's of course, the global markets that you spoke about. But here in India also, you're seeing some issues as far as the banking sector goes with what's happening with Yes Bank. Do you think that will add an impact as far as investor sentiment goes in the market, especially in the private banking names?
Undoubtedly, there will be an impact when an event like Yes Bank happens. But now that Damocles' sword is gone out of the head of the market, there is a restructuring package announced by RBI. On Saturday, there were analyst meet as well as press conference from SBI. And the message is very clear that depositors don't have to worry. There will be capital infusion in Yes Bank. which will allow it to recover gradually in a calibrated manner. So what was an unknown thing has now become known thing, and a restructuring package should be able to put Yes Bank on the gradual path of recovery. So that uncertainty is now behind the market. From here onwards, market should be happy that this worry is behind them.
But Nilesh, at a time like this, I know you've compared the situation to what we've seen in the past, but given that there seems to be no other alternative asset class for investors, it is looking like a very dire situation at hand. So what exactly is the advice that you have in terms of barring gold, where you are seeing some reprieve? It seems like all of the other asset classes have been hit hard. So what exactly is it that you have in terms of advice for diversification?
So our advice will remain the same. We don't know where the bottom of the market is, because a lot depends upon when medical science will find out a solution for the same. Our belief based on past experience remains that it should happen sooner rather than later. Second, it always makes sense to maintain disciplined asset allocation. Clearly, globally, interest rates are coming off. The 10-year US yield fell below 1% in almost 150 years history for the first time last week. So correspondingly, similar impact will be seen in Indian interest rates. We will see long duration mutual funds or bonds delivering return, not only from coupon income but also capital appreciation. You also mentioned about gold. In July to September 2008 global crisis, first gold prices came down, but thereafter, as easy money and lower interest rates prevailed, gold prices delivered fantastic return. Same thing could happen probably this time also, where a lot of easy money and lower interest rates could support gold prices. Third will be obviously your asset allocation towards equity. Right now it's all in the red. It's creating extreme pain, but the valuations are becoming cheaper if you believe medical science will find a solution for coronavirus. We believe in current scenario, small and mid caps have suffered a lot. From Jan 18 high, they are down about 40%. This was the similar level which were prevailing in July and August 2019. And from that point of time, small and mid caps did deliver 20% plus return by Jan 2020. Now again, courtesy coronavirus, courtesy other factors, they are down back to July, August 2019 level. From here, it makes sense to accumulate them. There is no short-term respite, there is no miracle. But if you take the pain of catching a falling knife, over a period of time, you will make a lot of money from there.
What about the RBI, Nilesh? Since we're all waiting to see if there's any calibrated action from central banks around the world, that will come sooner rather than later, as we've been seeing them more nimble of late. Nothing from the RBI yet.
No, they have come and made announcement that they are watching the situation carefully and they'll take appropriate steps to support the normalcy in the market and in economy. They have taken unusual steps like LTRO and twist to realign the yield curve. They have pumped liquidity and now banks are sitting on surplus liquidity. So clearly RBI is taking lots of steps, and my feeling is that they'll be there available for taking any steps necessary to ensure that markets remain normal, liquidity remains positive in the economy, and rates remain on the softer side, or the yield curve remains on the softer side, so that appropriate support can be provided to the economy.
Thank you, Nilesh, for sharing with us your outlook on the markets at a time like this.